Hey there, Lincoln here from bullacademy.org. Happy New Year's to everyone out there. Thank you all for supporting this channel through 2021. It was a hectic year. I hope that you all made it through successfully, or at least in the green or not too red, because last year was the year of red, the year of blood in the market. I, for one, am down 15% in my stock portfolio, my growth portfolio, since last year, today, January 1st, 2021, to now, January 1st, 2022. But I am not sad because I didn't lose a bunch of money because I didn't sell my stocks for losses unless I really wanted to in order to lock in those losses for tax loss harvesting, which we've covered on this channel before, so we won't get into it too much. But the point really is to take some losses so that I can write it off on my taxes for 2021 and not pay more taxes. Right? That was the only reason I would have sold last year. But other than that, I took advantage of all of the red on the streets last year. There was times when SoFi was in at $13 per share, $14 per share, $15 per share. I was buying those up every chance I got because I've always believed, and I've always said on this channel, that those short-term dips, those are great long-term discounts for those of us, those investors who believe in their companies for the long term. So when you see sales on the market, when you see your stocks in red, you should be buying them. And I was buying every single dip of my highest conviction plays all through 2021, through the GameStop and the AMC craze when everyone was selling some of my favorite stocks. And I had no idea why until I saw that they were going and taking all that money and throwing it into GameStops and the AMCs and all the other Bed Bath & Beyonds, the companies that didn't quite make sense to be invested in, given their fundamentals, given that they were closing down stores. Actually, back home where I come from in the suburbs of Philly, my childhood Bed Bath & Beyond is gone, right? The GameStop in the mall is still there, but that mall is struggling, right? AMC hasn't had a great year because of the pandemic. We covered all of that last year. We covered CCIV, Lucid Motors. We covered SoFi becoming a publicly traded company. We covered ChargePoint and so many other great companies on the stock market that I believe in for the long term. And Tattoo Chef, right? We covered so much. We did a documentary on Palantir, Open Door. We did one on SoFi. And we did interviews with CEOs and chairmen of publicly traded companies. Last year was a very long one when I think back to it. And really what I took away from last year was that every year won't be green on the stock market. It was my first year that was consistently red, right? I would have some weeks where it was green, but most of the time last year, in our Discord channel for our patrons at patreon.bullacademy.org, we were always trying to cope with the red days, motivating one another to continue to buy and continue to stay in the market, because that's how you succeed on the stock market. Not by trying to get in and out on time, not by trying to time the market and buying high and selling low and buying, right? You don't want to buy high and sell low. That's the opposite of what you want to do. You want to buy into companies, want to invest into companies, and then hold them for the long term, right? And the way you do that is by buying into companies at a point where you know something about the future of this company, that you believe in the future of, and you are convicted in their mission and their ability to actually achieve that mission. And you have some sort of insight into how they're going to do that. And that insight doesn't have to be special, doesn't have to be hidden, because they're a publicly traded company. All this information is public to all of us. That's what it means to be publicly traded. So the insight is there, but you need to have it. So if you know it, you see it, and you've done your research, then you buy into it, you invest into it, and then you hold it for the long term. And every single quarter, every single year, right, you look into it, you reassess your investment, and you see You decide whether or not it still fits your thesis, whether or not your investment thesis still makes sense for this company, if it's still a good company to continue investing in. And if it is, based on its revenue growth, based on its profit margins growth, based on the executives of the company, whether or not they're staying and continue to show that they believe in the company and continue to invest in it themselves and continue to hit their marks that they set, right? Their guidance every quarter, every half a year, every year, if they continue to hit that and you see them continue to increase those guidances and strive for even greater goals, then you see that this company is legitimate. They have fundamental value, right? And the business is making sense. It's working. When you see all of that, time after time, you continue to invest into it. You continue to buy and hold. You buy and you hold. You buy, you reassess, and you continue to hold unless your thesis changes. And if it does, you sell and you consolidate into your convicted companies, the companies that you're still convicted in the mission of, that you still believe in. So you don't just sell and take all that money and go buy a luxury car, buy a Tesla, buy a Lucid Air. You take that money and you find what the next best investment is, and you put your money into that. So when I sell some of my favorite companies because the thesis has changed and they don't fit my investment goals any longer, I don't take that money and go on a fancy trip or go buy something cute to show on Instagram for the people watching me out there, because that's not what life is about. Life is about building wealth so that you can use your time how you want and do what you want with your time, with your loved ones, right? And enjoy all of your moments on this earth without having to work for a living, right? That's what we're doing here. So if you take all that money and you just buy things that are not producing you value every single time, you're not going to get there. So what I do when I sell my investments, I take that money and I look into my remaining investments and I say, are these still the best investments that I can make? And if that's the case, I put my money into those. But if it's not the case, I find other investments and I diversify into those. But as you know, I'm not big on diversification, so I usually just consolidate even further. So last year, I started the year with maybe 7 companies in my portfolio. And I had a goal of getting it down to 5. And I did even better in my assessment. I ended the year with just 3 investments, 3 main investments, where about maybe 90% or more of my wealth is consolidated in. That's 3 companies. And more than half of that is accounted for by 1 company and 75% by 2 companies. Because I sold off a whole bunch of companies last year that I still love, I still believe in, and I still think are great investments for those out there who believe in them still and are more passionate about them than I am. And I have my reasons of selling them. I've told my patrons, I explained every single one of the companies that I sold in detail and why and what my fears were, the risk that I was trying to avoid for the future, the long-term future, why I sold those companies. And then I explained why I was consolidating into my newer companies. I will share all of you over this year. I will share my portfolio soon. I promise. I haven't done a portfolio review for quite some time now because there's reasons, but I will do a portfolio review, so stay tuned for that. But I took all that money and I consolidated it into my highest conviction plays because I believe that because I'm still young, I could take great risk. I can afford to bet big on a few companies, and because I believe in myself, I believe in my ability to make good judgments, sound judgments, right? To assess a company, figure out if it makes sense, and then look into the future and figure out where they're going and where they might be going after their next step that they've told everyone else, right? Because we're not investing just on what exists today. We're investing on what might be tomorrow, what we believe the future will be in when it arrives, right? Where we're going, what we want the future to become. So if you believe that the future should be in all about clean energy and will be electric vehicles and wind power and solar energy, then you find those companies and you invest in them. If you believe that it's going to be blockchain and it's going to be DeFi, decentralized finance, which I don't believe in, but if you believe in that, then you find those companies and you invest in those people who are building the infrastructure for that. You don't just invest in the top level companies that are the shiny toys. You try to find the infrastructure, right? The Amazon Web Services of that space, the ones that are building the pickaxes, right? You find those and you invest in them. As long as you believe in them, you understand what they're doing, and you plan to hold for the long term, if you believe in that future and that for good reason, and of course you trust your own judgment, then you should be excited and convicted in those investments, right? But if you're not so convicted in your own judgment, which is fine, we can't all be convicted because that's everyone can't be so confident in making such big bets, and that's fine, right? So if you aren't that person, you find the indexes, right? The S&P 500s, there's so many indices out there, the ETFs, right? ARK Invest, and whoever else, right? Vanguard. Find the indices that encapsulate your favorite industries, be it clean energy, be it genomics revolution, CRISPR, and all of those companies, be it EVs. Find those and invest in those so that you can diversify your investment to lower your risk, right? If that's what you want to do, you should do that. But don't just take your money. Don't just sell your stocks because everyone's panicking and then just hold on to that. That's how you stay poor. If you're going to sell, you take that money, you look somewhere else, and you put your money into those investments. Or you can buy real estate, or you can build your own business, or so many other options that are better than buying shiny toys to show on Instagram. You have so many better options than to stay poor. So last year, I spent all my time doing that. Every time the market was down, when SoFi was selling off to $13 per share, $14 per share, I was buying in. I was buying thousands and thousands of shares, right? Same thing for Cloudflare. Same thing for ChargePoint, Lucid Motors, and all the other companies I believed in. When I had a chance, I was buying in at a discount. When I see sale, right? When you see sale at the mall, you don't run away. You run to that and you say, hey, I still like those Nikes. I still like those Aeropostales, right? If that's what you used to like and nothing has changed, but it's just a sale, the materials that they use to build those shoes, they're still the same. Nothing has changed about that. It's just that the market's sentiment, market's feelings about those shoes have changed. But the shoes still work. You can still walk in and go to the market and go to the park and go to the party. They still work. So there's no reason to run away from it. So if you want to run from a sale in real life in the market, why would you run away from a sale in the stock market? If someone comes to you tomorrow and says, hey, I believe your house is worth 50% less than it was yesterday, sell it to me. Would you sell your house for 50% less because some rando off the street said that your house is worth 50% less? Would you sell? No. It's the same idea on the stock market. Just because somebody else says that your stock is worth less doesn't mean that it's worth less, right? It doesn't mean that the fundamentals have changed. Doesn't mean that the business is doing worse today. Usually, there's not much change in the business every single day. But every quarter, every half a year, every year, you assess the business's actual operations. Are they making more money? Are their revenues growing? Are they increasing their profit margins? Are they innovating on products and satisfying their customers, increasing their net promoter scores, NPS? Are they doing better than their competition in that realm? Are they avoiding conflicts and scandals? Is the management team still strong and getting even stronger and more tenured? Are they bringing in the best talent, right? Are they diversifying their talent? All of those things are fundamentals of the company, not the stock price. The stock price doesn't reflect the company's operations in any given day. All it does, it reflects how a bunch of traders, stock market traders and analysts and institutions feel about the company from day to day. So you don't want to fall into the trap of selling your stock because everyone else is selling. When they are fearful, be greedy. And when they are greedy, be fearful. So when you see your favorite companies' stocks falling, that's not an opportunity to go join a panic and sell too. It's an opportunity to assess what's going on, understand why it's happening, and then say, hey, this business is still growing at 50% per year. They're still increasing their profit margins. They're becoming profitable and more so. Their customers are still loving them. They're about to become an actual bank with their bank charter. What's going on here? Oh, someone said something mean about the CEO because they don't like them now. Well, that doesn't matter. The CEO is still performing well. The business is still growing. I'm going to buy that sale. If it's down 10%, if it's down 20%, I'm buying that sale. That's a discount, right? So that's what I was doing all of 2021. And I lost, at least my portfolio's market value on the charts. It says that I lost lots of money last year. I lost 15% since January 1st, 2021. But over the long term, I believe that I gained more equity. I was able to buy more shares at a cheaper rate. That's what matters. In the short term, sure, it might look like I lost money and that I'm a bad investor. But that only may be so to people who don't understand long-term investing, which is the best kind of investing. Because the short term doesn't really matter that much, so long as you can survive it and you're not going to go bankrupt. But over the long term, if you have a chance to buy shares at $1 per share relatively at cheap rates, and then hold on for 5, 10, 20, 30 years, your wealth's gonna go like this. Flat for quite some time, and then off to the races. We saw that with Amazon in the early 2000s until 2006, 2012, and 18, and so on, right? And all of a sudden, they took off because they spent all those years investing in the business, building out Amazon Web Services, building out their dominance in the e-commerce market. And then all of a sudden, people saw, wow, they spent all that time while their stock price was being demolished by traders on the market. They spent all of that time building up their infrastructure. Amazon Web Services is so dominant. All of their competitors are using it, right? They're paying them to exist, right? Netflix pays Amazon billions of dollars every year just to exist. And so many other companies do the same. And on top of that, Amazon's main business is doing exceptionally well. No one can catch them, not even Walmart. And the reason for that is because they were able to invest all of that money from their Amazon Web Services that they were building out over those decades into building out their main business. So it's the same thing I see with SoFi, which is why I bought so many shares, like thousands of shares last year when it was dipping and dipping and dipping. I would buy it and it would dip. I would buy the dip and it would dip. Buy the dip, dip, right? It kept dipping. And I kept buying. And I kept telling our patrons at patreon.boacademy.org, I am buying SoFi every chance I get. Because in 2 years and 5 years, SoFi will be multiples of what it is today. Even if it doesn't get a bank charter. And I believe it's going to get a bank charter, but even if it doesn't, simply from other companies, I assessed, I said, what's going on here? Why is the stock dipping? Has anything changed? I kept buying. That's what you have to do. And on the opposite side, if you see a company's stock just skyrocketing, that's not an opportunity to go buy it. When we talked about it last year, in the video, the market is not your friend. Because when you see the stock price just jump, what's happening there is a bunch of hype, a bunch of pumping. And what follows from pumping is dumping, right? So you get pumped from the bottom and you see it rising to the top and you buy at the top. What comes next is information asymmetry. Somebody else knows something that you don't before you do, and they start selling and they sell. And by the time you notice and understand what's going on, you bought at $100 per share. Now the stock is at $25 per share. Just like that. Because nothing changed between when it was $10 per share and when it went to $100 per share and then when it went to $25, right? But you saw the excitement and you wanted to buy in because everyone said hold the line, right? GameStop, AMC. But you didn't look into the company. You didn't understand what was going on. You thought everyone was your friend. And they were telling you, hey, I saw this great stock on Reddit, Wall Street Bets, and on Twitter. You should go buy it too. It's $100 per share. And it was just $10 per share yesterday. It is so exciting. It's going so high. It's only going to continue to rise. I'm buying it. You should buy it too, dude. And we're going to hold the line against the institutions, against the suits. Before you know it, it falls 50%. And another 50%. And another 50%. Until it gets back down close to what it was just last week. And then you're wondering, what just happened? I thought this was going to stay high forever. I thought we were going to the moon. Well, it's the same thing. If you go to the mall and all of a sudden those Nike shoes or those Yeezys are 50% or 2 times more expensive, that's not because the materials in the shoes have been appreciated, right? They're not using diamonds now. Is because Kanye West released a new album or Kim Kardashian said something crazy. And so now everyone's going crazy about Kanye and his clout increased. And so now the shoes are worth more because everyone says it's worth more. And everyone says Kanye's God. And so we're going to buy his shoes and we're going to praise the Lord Yeezy. And so you should buy these shoes too, even though they cost 2x more than they did yesterday because we say so. It's the same thing that happened with GameStop. Same thing that happened with AMC. Nothing changed fundamentally. The companies did not become amazing multi-billion-dollar companies overnight, despite the future going against them, despite Netflix, despite Xbox, right? And Xbox Online, right? And digital copies of games on the PS5s. So you have to assess all of that. You don't just buy into these momentums because they're exciting. And I know it can be tough to ignore the excitement. Even in fundamental companies, sometimes they jump and you think, oh man, this is not, I don't want to miss out on buying at this price before it continues to rise higher. And I've been caught on that too. I bought Jumia for $50 per share last year, as it was rising because I thought it was going to continue rising. I didn't take the time to look into why it was rising so much, and it fell from there because I dollar cost averaged up. I don't regret it, but it wasn't the best idea. So it happens. You just have to understand why you want to buy it. And understand that maybe it's not the best choice at this time. Take a break, come back to it later after doing some more research, and then decide if you want to buy it. So the whole point here is to do the research, right? To do the work. And that should be the theme of this year for you. Do the work, do the research, look into these companies. If they make sense, if you believe in them, and think that they have great long-term potential, and will allow you to build equity in it over the long term, then pull the trigger. And then continue to pull the trigger over the long term. Consistently continue to buy into it. Every month, put in a certain amount of money into that company and continue to acquire more equity. That's really the goal here. It's all about equity. The more equity you can acquire as your companies continue to perform better and better and build up more value, the greater you will benefit from the appreciation of the value of those assets. That's all it's about. Equity. That's really it. When you're investing for growth, You want to acquire as much equity as possible as your company is continuing to build up their revenues, and then just hold on and continue to reassess every once in a while, every quarter, every year. And if it still makes sense, you keep buying and you keep holding. You keep reassessing, you keep buying, you keep holding. That's all it is, right? And if you're just investing in index funds like the S&P 500, it's the same thing. It's even easier. You just keep buying and you keep holding. You put in 15% of your income every month and you just keep it there. As it goes up and down, because it will, you just keep buying, because unless you believe the United States government is going to fail tomorrow in 10 years or 20 years before you retire, then there's not much reason to be afraid, because the stock market over the last 100 years has trended upwards. That's what it is, right? Of course, it goes up and down in the short term, but over the long term, you can't even tell. It's just like that, right? So I think I did that backwards. I think this is up and to the right. So yeah, there's no reason to panic. And we had a great reset stuff last year. Everyone talking about the great reset. And what's the great reset? Is it going to come tomorrow? Is it coming next week or next month? Are you going to lose all your money? The stock market is going to fall 80%? It didn't happen. That's the fear mongers. Always putting out headlines. Always putting out new videos. Always trying to incite fear into the markets. And if you don't like the suits, sometimes they do it so that they can get in at cheaper rates. They manipulate people who don't know what they're doing, who don't do their research, and they get them to sell their stocks so that they can come in, the institutions can come in and buy those same stocks at cheaper rates for their clients. So they can tell their clients, hey, look, I got you a great return. Because there were some fools who sold off their stocks because we told them that there's going to be a great reset tomorrow. Isn't that wonderful? So when you see all these, it's going to happen this year too, with the Federal Reserve saying that they're going to increase the interest rates 3 times this year to near, I believe they said near 1% or something like that. I forget exactly what it was, but it's not going to be a huge rate hike, right? We're at 0%. They're going to get near 1%. So what? Companies will have to pay 1% more for the money that they borrow, which means a little bit less growth. But interest rates have been higher before, and we've only continued to grow our GDP. And companies that want to continue to build up incredible amounts of wealth. Have you seen how much Google, Apple, Amazon, Facebook are worth? All of that happened when interest rates were higher than they are now. And then they will be this year and the year after and the year after. We've been through all of this. Companies will survive. Growth companies will continue to grow. Just find the best ones and invest in them, and you hold them for the long term. And you practice the bull mentality. The bull mentality, what is that? What is the bull mentality? I'm glad you asked. The bull mentality is that we know what we invest in. We understand what we invest in. We believe in what we invest in. And we hold for the long term, because that's how we build wealth. That's how we give ourselves the best chance of success on the stock market and in any investment that we take. It's been proven for the long term. If you buy and you hold patiently, the fools who sell their stocks at every panic, they will transfer all of their wealth from their pockets, from their investment portfolios, into yours, right? Just because you held. Patience is the lever that you have to leverage. So if you continue to be patient, the fools will pour all of their wealth into your pockets, and you can tell them thanks later when you're retired, when you want to be, on your terms, before you're 65, before you're old, during the time when you can enjoy it in the company of the people that you love, and go on all the trips that you want. Wake up when you want. No alarm clocks, right? No one telling you what to do every day. That's the goal of building long-lasting, sustainable wealth. Freedom. That's all it's about. It's not about being greedy. It's not about showing off your life on Instagram and getting all the pretty girls or all the pretty boys, right? It's all about you doing whatever you want and not having to answer to others. And the way you do that is by practicing patience and practicing the bull mentality. It's that simple. So this year, I want you to dedicate yourself to practicing the bull mentality. Of course, I'm not giving out financial advice because I'm not a financial advisor. So this is not financial advice. As always, that is, you should know that by now. But if you practice the bull mentality, as I will continue to, as I coined, then you will have a much better chance at surviving whatever happens this year and staying invested for the long term. Because if you can survive, then you've won the game. That's all you have to do. Survive the downturn so that you can benefit and participate in the upside. If you survive, you continue to invest for long term, you will benefit from the appreciation of the value of your assets. So I hope you enjoyed this video. I know it's a little bit all over the place, but I'm excited for this year. I'm excited for 2022. I'm sorry, my voice is a little struggling a little bit. I had COVID. I'm not sure if I covered it in this video, but I had COVID this week. Wasn't great. Didn't end the year off great. I was struggling a whole lot in bed for most of the week, but I'm doing much better now. I just still struggling with my voice a little bit, so excuse me. But I'm excited for 2022. Hopefully we'll get through this COVID pandemic and we won't have it be a pandemic anymore. Maybe it'll be an epidemic or even less. That's the goal, so that we can get back to living our lives the way we want to, and not having to be so fearful of uncertain shutdowns of world economies, and not being able to go to the movies or to your family safely, or just walk in the park or to go to your favorite restaurant. I am excited for a lot more progress in the pandemic, in the stock market, in the companies I'm invested in. I have 3 companies now, as we discussed earlier, in my portfolio that I'm invested in incredibly heavily, and I will do a portfolio review this year, I promise, and I will show you my 3 companies. Maybe it'll be 2 by the time I show you my portfolio, because I want to be as concentrated as possible, right? I believe in concentration because that is how you build wealth, right? Of course, I'm being incredibly aggressive in my concentration. You don't have to be this aggressive, maybe 10 companies or 5 companies or whatever you feel comfortable with. But I want to be as concentrated as possible. If I could do 1 company, I would. Maybe one day I will. Maybe, right? So that's my plan, to be as concentrated as possible. Invested in 3 companies right now. I had maybe 7 or 8 last year at this time. And I set a goal to get down to 5. And I beat it by 2. So now I'm at 3. And I'm excited for what other companies might go in the public market this year. I'm looking forward to Stripe. If Stripe goes public this year, I am buying into Stripe as much as possible. Stripe is an amazing company. That's what I'm looking forward to this year the most when it comes to the stock market. Getting into Stripe, I'm highly hopeful that they go public. I missed out on MongoDB, which is also an amazing company that I use every single day in my own platforms that I build. So I would have loved to invest in them in 2018, 2019, 2020, but I missed it. I didn't have the chance because I didn't know that they were on the markets. And that's really part of half of the battle, right? Knowing that you have this opportunity to invest in a company. So I am keeping my eye on and keeping my eye out for Stripe. And I'm hopeful that GoPuff goes public. I don't know what they're doing. I was an insider at some point, but no longer. Right, so if they go public, then I benefit because I have private shares of GoPuff. Of course, this is all public information. I haven't said anything private. SEC, if you're watching, don't sue me, please. So yeah, hopefully Stripe and GoPuff go public this year. That's what I'm looking forward to. Yeah, I'm excited. 2022 is gonna be great, and I'm gonna take whatever it hands me this year, like I did last year. 2021 was a great year for me, despite the pandemic, of course, despite all of the losses on the declines in the stock market being down 15% since last year. I had a great year. I bought a house, right? I'm sitting there now. I'm loving my office. The channel grew a lot. I set a goal to get to 8,000 subscribers missed it by about less than 40 subscribers. So if you're watching, you enjoy these videos, you want to see more like it, please do me a favor. Do us all a favor, because I need you all to engage in order to continue to make these videos. So if you enjoy it, don't forget to like, subscribe, comment, share this video with one friend. Every video you watch, please, if you enjoy it, do me a favor, do yourself a favor, do your friends a favor, because if you are the only one building wealth in your circle, then you're not really building wealth. You'll be alone. You don't want to be alone when you're wealthy, right? So share with your friends, help them build wealth too, and we can all go on this journey together. And you will help me continue to be motivated to create videos, right? It's very important that you engage. I appreciate all of the engagement that you all showed last year and that you all continue to show for this channel. We've grown very fast in our first year and a half, starting in July of 2020. So we are in our year and a half right now. So we still have 6 months until year 2 is up, and I hope to get to 10,000 subscribers by the end of this year. Right, I am confident we can do it. I'm building the team out, getting some video editors to help me, and hopefully I'll get one. I haven't found one yet. They have to meet my high bar for video editing. I've brought on a video creator to join me, Danielle. She's doing wonderful. If you ever seen the first video that she did at the end of 2021 in December, a few weeks ago, on Roblox, in the metaverse, you have to go watch that. It was an amazing video. I'm so encouraged by her talent and the skill and just the storytelling ability that she's gonna bring to this channel and this team. And I want to find more people like her. And if you're out there, you're watching, you want to become a content creator, and you're interested in telling stories about the stock market and giving your opinion and experiences and insights into the markets, I would love to hear from you. Let me know. Comment below and we can figure out how to get in touch. Follow me on Twitter and I'll follow you back. Follow me on Instagram. I share random thoughts there every time I get them about the stock market, life, just career, whatever I'm not sharing here or our patrons, whatever is random thoughts I get in my head, I share it there on Instagram at Lincoln W. Daniel. So follow me on Instagram. Basically, the more you engage, the more I can create content and this channel can grow. And it's going to be a great year. So I really hope that you've been enjoying bullacademy.org. And I promise we're just getting started. We're going to have a great year and build up even more momentum for the years to come. I'm really excited, and I hope that you are too. I'm wishing you all more growth, more success, more happiness in the new year. And let's do this together, right? We'll practice the bull mentality together, and we'll build long-lasting, sustainable wealth together. So once again, if you enjoyed this video, and I hope you did, thank you for being here. If you did enjoy it, do like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts. I would love to hear from you, and I do my best to reply to every comment below. And I want to give a big shout out to our patrons who stuck by me last year through all of what I went through last year, because I had lots. It was very up and down. And creating videos inconsistently, but I got out lots of videos last year. We reached 200 videos last year in less than a year and a half, and all of that couldn't have been done without our patrons, because they support this channel financially, keep it going, and help me buy all the equipment that I have here, the whole camera setup, lighting, and everything that you see in this set is because of our patrons. And these videos are brought to you by them. We do this show together, and I greatly appreciate them. All of you out there on the Discord channel, you know who you are. Thank you so much for everything that you do, all the engagement that you give me in the Discord channel, and the support, and all the ideas, and just the community that we have. It's been great building up this channel together over the last almost 2 years now. So again, thank you to all of you. And if you're out there watching, you want to become a patron, you can become a patron, support this channel financially, help us keep going, help us continue to evolve and build this channel even greater. And of course, you'll be in community. You'll get to engage in our Discord channel where we share news, rumors, and new investment ideas, so we can all do our own research and come back together and collaborate so that we can all build wealth together, right? We do all of that in our Discord channel at patreon.bullacademy.org. So if you're interested, I really hope that you would join us. I'm looking forward to what we do this year. That's it for now. I'm Lincoln with bullacademy.org. Thank you again and have a great day.